There's no doubt this major escalation in trade tensions exists and consumers are going to feel the impact of these latest tariffs. Let's get more perspective now with Robert Moran. He's a partner with the Brunswick Group, a strategic consulting firm. Robert, struck by the Washington Post this morning on the front page, over and out. It's about a CB manufacturer in the Midwest. And the vice president says, my government just clubbed me over the head. And this story, I think, is emblematic of what a lot of smaller companies are dealing with. He said, you can't shift things overnight. They can't find another manufacturing site. So now they're going to have to raise prices, and then they may lose market share. They may have to have layoffs. A lot of companies are dealing with this sort of thing, correct?
That's correct. I think what you're seeing is the pain can be highly localized and specific to an individual importer, exporter, producer, et cetera. While the general population might not feel it as much, we are getting these pain spikes in agricultural areas in the country. You see this in the grain belt, worried about agricultural exports to China, et cetera. And this story here this morning, famously in the Washington Post that everybody read over breakfast. Yes.
Let me ask you about what we are going to feel. 6,000 items. We're talking about baseball gloves. Junior wants the baseball glove. It's going to cost more. Seasonings. If I want to put a little bit more salt on, it's going to cost more. Brakes, tires. I mean, this is really going to impact consumers as well, correct?
Yes. And so what's interesting here is we already have a lot of data on this. We know a couple things. The first thing is we know there's an expectation among American consumers for prices to increase. There was an Associated Press survey in August that showed that 72% of Americans expect some kind of price increases to come out of this. 21% expect large price increases. The rest expect relatively small, which is what Secretary Wilbur Ross has been arguing. He's been arguing that you're going to see small price increases and that theoretically it'll be worth it for the American economy in the long run, right? So that's the argument. But the question then remains, when do we see those price increases, and are they higher or lower than expectations? We know that economic actors in advance of the tariffs began building up inventories before they hit effect, right? So those inventories begin to be depleted. Once those inventories are depleted, prices go up because now the prices of those goods are higher, and those get reflected in the marketplace. So we don't know when all those prices start to trickle through and whether they're higher or lower than the American expectation. And of course, Christmas shopping season is quickly approaching.
You know, Ross makes this argument in the long run it's going to benefit them, but is it? I mean, in this case, this guy says, if I find manufacturing, I'm going to Vietnam, or it's not bringing jobs back to America, which seems to be the argument that's proposed. Doesn't seem to be the case, though.
Well, this is the issue, right? The issue is, can you substitute out, and how would you substitute out? So if your supply chain is somehow severed, how do you then substitute for that good? Do you purchase it elsewhere, maybe in another emerging market, or do you produce it domestically? I think the theory is that the White House believes that it will be produced more domestically. Whether that happens or not is, I think, a very open question. The other thing here is you have two governments attempting to engage in a trade war, but you have millions of other economic actors in figuring out how to get around that trade war. And I think that's what becomes very interesting, how they set up supply chains. That you might see supply chains set up, for example, in Brazil, which is, I think, a very big discussion point when it comes to agriculture right now.
We'll be watching all of this. And Robert, always great to have your analysis. Appreciate you coming in this morning.
Thank you.